Hello and welcome everyone to our panel today. And today's conversation focused on inclusive financial systems. My name is Matt Wallace and I'm representing the Aspen Institute today. For those familiar with Aspen, you're probably more familiar with our US focused work. But what we've seen over the last few years is a great convergence in the shared financial experience of people globally in the United States, Europe, Africa, Latin America, and in Asia. And we are very excited to be convening practitioners from around the world focused on the subject of inclusive financial systems. So over the last week, you will have seen through our partners at Accion CFI a daily poll focused on the different themes across Financial Inclusion Week. Polls are still open, so please contribute your voice to those daily polls. If you go within the CFI platform, on the left-hand side under the interactive, you'll see those daily poll questions still there. To discuss these results today, we have an all-star cast of financial inclusion experts who join us from around the world. And I'd like to introduce each of them here today. We have Bob, if you don't mind waving. Hey there, Bob. Bob is a board member here at Accion and CFI and recently retired from a storied career at Citi. We have Maha. Hello there, Maha, joining us all the way from Jordan. Welcome. She's CEO of JOPAC, which is the Jordan Payments and Clearing Company, and previously at the Central Bank for several decades. We also have Salah. Hey there, Salah, who is an SVP at MasterCard focused on humanitarian development and previously led one of the financial inclusion labs out of East Africa. We also have Klaus. Hey there, Klaus, welcome. Who leads financial sector development at GIZ. And then finally, but not least, we also have Ida Rademacher, who leads Aspen's FSP program. Welcome, everyone. It's great to see everyone today, and thank you for joining us across time zones. It's very exciting to have this conversation. So let's dig right in and reflect on some of the poll results, which for me were quite surprising in some areas. So the focus on day one here is on why are inclusive financial systems important? And what really surprised me from the poll results was the magnitude of the responses. So over 80% of respondents indicated that current definitions of financial inclusion should be improved and expanded. And likewise, over 80% indicated that there are gaps in the measuring of financial inclusion. And this indicates to me that something is missing, whether it's in the definition or in measurement. And indeed, we asked all of you, what should financial inclusion achieve for people? And I think one term that really stood out, which I think was expected, is access. Then a lot of the other words that you all shared around what an inclusive financial system should achieve touched more on the psychological. We had safety, empowerment, opportunity, and protection, all within the top 5 words. So what I'd love to hear is some of your reactions, and we'll go down within each panelist here before then opening it up to an open dialogue. So based on these results on day one around why inclusive financial systems are important, where do you all see opportunity to expand definitions or measures to better account for the outcomes that these systems should produce for people? And let's lead with Ida, and then we'll go around the horn.
Sure. I'm hoping that we will be able to share through Accion the kind of visuals from some of these polls, because I think they bring it home for folks. And I want to also just start out by thanking Matt for leading this project for us, but also thanking the MasterCard Center for Inclusive Growth for the Global Inclusive Growth Partnership that's really helping us to start this great convergence dialogue, and you'll hear more about that from Tim Ogden, who's in a webinar coming up after this, but we're excited about centering the next generation financial inclusion conversation on the kinds of questions that you're asking in the poll and really working across the board on that. I think it's no surprise for me, I run the financial security program at Aspen, so as with most of this field, financial inclusion is a means, not an end. And I think we're getting more and more centered on the idea that that end goal of well-being, of some level of dignity and agency is there. And so I think, you know, in terms of where does financial inclusion need to go, it does need to go to a place of outcomes, both subjective and objective levels of resilience and adequacy for folks. So I'm happy to see some of the words that came up here, and you know, words like empowerment, words like protection, a lot of pieces that are more end game for what do people need to thrive and flourish, and that's where I'm happy to see where the field is challenging itself to go further.
That's excellent. Klaus, do you have any reactions to the poll results?
Well, look, if we talk about definitions, the starting question is which definition are we talking about? And I think we need to make that explicit. And let's just use the World Bank's definition that for them, financial inclusion includes individuals and businesses that have access to useful and affordable products that meet their needs and are delivered in a responsible and sustainable way. And it's my impression that the top four mentions, safety, protection, empowerment, and opportunity, are actually covered by this definition. That's what I see. And so what I'm more interested in is what we understand by delivery in a sustainable way. 10 years ago, that meant financially sustainable. And today, more and more people associate the environment with sustainability. So all around the world, we see efforts of greening the financial system. And I suspect that this journey eventually is going to push towards the bottom of the pyramid. It hasn't yet, but I suspect it will. What I'd like to see is financial services that include the bottom of the pyramid in climate mitigation efforts. Financing green technologies at the bottom of the pyramid is an opportunity. We want to enable green growth, but how can we tell if a microfinance portfolio is green? We can't right now. The fight against climate change also includes adaptation, and for individuals, we call that resilience. And traditionally, financial inclusion focused on reducing poverty and income smoothing and that kind of stuff, but climate change threatens the bottom of the pyramid with bigger and more frequent shocks. And would we not expect financial inclusion to meet the challenge of this new reality? How do we know if we are? So my question, I only have questions here, is if resilience is just a new word to describe the same old, or if we're aspiring to something new, and if that wants to be measured.
That's excellent. Bob, either reactions to what Klaus shared or just reactions to the poll itself?
I mean, to the poll, it's that we all must be very like-minded people, because the outcomes are very, very similar to all this poll. So we're hearing each other well, and we're probably very aligned. I guess I go back also, I mean, after all those years from doing this from the financial sector, and now University of London trying to reflect also on the outcomes. I go back a bit to some of the responses about empowerment, and how much does that find access empower you? Is inclusion the same thing as really participation? Is the same thing as having the ability to use and achieve goals? And I think, I just know for many years, as Klaus said, we measured outcomes on financial sustainability, on usage. And I think what is coming out of the questions and out of the feedback is we want to go beyond that. There's such a broad discussion at the moment around the bigger picture. So if you include people in an inequitable system, if you include people, as Ida knows from my work in the US too, if there's been a wealth divide structurally, generationally, whether racially or ethnically or by gender, does inclusion address that? Is it a level playing field? I mean, does it help you to address that? So I think what's so interesting is to see, I often worried that all our work on microfinance, we were the A&E, as you'd say. the emergency room in the financial sector, you got to that window because the rest of the healthcare system left you out. I don't think it's as bad anymore. But I mean, we still have to address the system and some of those bigger questions that lead people to worry about, does access give me empowerment? Can I leverage the tool to achieve not just resilience against harm, but for opportunity and for growth? So I think that it raised many broader questions and values to me too.
That's great, and I love how you phrased that in terms of values. Let's bring in Maha. What are some of your thoughts or reactions either to the previous speakers or to the poll itself? And you're on mute, Maha.
All right. Actually, I see financial inclusion is a much bigger phenomenon than people usually or initially believe it to be. The definition of financial inclusion should capture this broadness. So like other and most inequalities, it's not felt by all equally, and neither is it felt in the same way. So financial inclusion, from my perspective, should cover the integrity, the livelihood, the economic opportunities of people, equality, and it should address within the definition or how it is measured, not only access to transactional accounts or payments. It should cover credit, insurance products, literacy, responsible financial services. So we're talking more about sustained livelihood, economic opportunities, access to pool of services, empowerment of vulnerable society segments, and to be honest, not only the bottom of the pyramid. In many of the countries in the developing world, financial inclusion, if we want to talk about ease to access and the transactional costs of financial services, it's not only the bottom of the pyramid are impacted. Many other within the middle of the pyramid are impacted. So I believe the definition should be broader. The measure should capture other attributes and impact of financial inclusion as a goal and as a tool, not as a goal, and how it is reflected within the other goals.
Thank you. Salah, what are some of your reactions to either what you've heard or to the poll results?
Yeah, first, thank you for having me. This is already a lively discussion, and I love that even from the start, where the definition we're using is so much broader than just finance. And I think that's what's reflected in the poll. So I wasn't surprised to hear, I think it was 80% or so said that there should be a wider definition. So some of my colleagues and panelists reflected on some points. I won't repeat them, but I think maybe just to put a finer point on one area, and that's measurement. And I think that manifests in two ways. The socioeconomic measure, that some of what Maha just mentioned, but also measurement in terms of services. If I think of financial inclusion in its fullest expression, it is a facilitator. And I think that's why we've grappled for what going on 15 years now of the definition, because it's a means to an end, but a very powerful means to an end that it can be life-changing and life-impacting. And so I think about it in that sense as a solve to a market failure. And the market failure leads to access to vital services. So in places where, there's places in Nairobi, where I live, where it costs more for neighborhoods to get water than it does in California, for example, because there is a failure there. Either a demand to secure demand and secure payments, or a failure in supply. So I think of the services that one can access if financial inclusion really comes against the high acquisition costs and the broken economics. And I think the measurement needs to reflect that. The access to social and human services, and also the development effects from having access to those services. We know what having access to clean water, education, et cetera, really helps communities accomplish. The other one is just to put maybe a finer point on distinctions within socioeconomic sectors. It's true what Maha said, it's not just the bottom of the pyramid. There is financial inclusion at different levels, if you look across the globe, that are still wanting, even for people that you would consider middle class. So I think we can't miss the distinctions and the distinct needs between the socioeconomic classes. What financial inclusion looks like and what it means and what we need to do about it is very different with someone who's making $1.25 a day, where compared to someone who's making much more. And we will miss that important nuance, especially if we want to take a human-centered approach, which I think is critical, if we don't have that kind of distinction in measurement.
That's excellent. Do any of the speakers want to build on what a fellow panelist shared? Yeah, Klaus.
I mean, Salah, I agree. You know, measurement, ultimately we define indicators because we want to measure, right? So we have a definition, then we define indicators, and, you know, then we measure them. And remember, 10 years ago, like it feels like a long time, we actually sat together and defined those financial inclusion indicators. Like I was part of like that effort when we sat down and, you know, tried to do that. So now when I listen to this conversation, it's very inspiring, it's amazing, it's impressive how far we've come, but I also would caution to not mix up what do we want from financial inclusion, what do we aspire to, what is our expectation of impact, and you know, how can we measure this? When I hear empowerment, resilience, things like green or sustainability, you know, in finding indicators that we can measure and then compare our progress against it, that's a different story. So I would caution to not bite off more than we can chew. I think it's important to be inspirational, but when it's about definition and indicators, oftentimes the reality is a different thing than the inspirational speech.
Yeah, the one thing I would,
reactions?
yeah, just one is agree. I mean, we have to be very careful what we measure, you know, the strength of the measurement on our level of confidence. I do believe, however, we need to find a way to quantify the knock-on effects or even the correlation of access to finance for two reasons. One, on the demand side, because I do think that it will help, you know, the global conversation and people understanding the importance of it. If we can draw a line from having access to finance and then getting access to something like drinking water, like I mentioned, for example. I think that is key because I do think it is a facilitator. I don't think it's the end goal. Also, on kind of on the other side, it's important to make the business case for providers to get into financial inclusion to understand some of the effects and some of the markets it can create. So even definitionally, if we stick to access to accounts or the definition that Klaus read, I think what we're feeling here is an underrepresentation of the importance and the impact if we don't capture some of these auxiliary effects. So I do think that they are important to capture.
Thank you. I think Ida is actually going to share one of the poll responses via screen share.
I'm happy to. Which one do you want me to show? Or do you want me to walk through the ones we've just talked about so everybody can see what we just went through? Or do you want me to move to two? What's your preference?
Why don't we show the word cloud actually of what financial inclusion should achieve? So we mentioned some of the top themes that came out, but that way people can see that too.
Okay. Top two. Okay, are folks seeing this now?
Yep.
Okay, so this was the 84%. And then as we go forward, here's the word cloud.
So as we are discussing here, some of the themes that came out, some of the top words did revolve around safety, empowerment, opportunity, and protection. No surprise that financial was the most said word within this.
Want me to go forward?
So these were, yeah, please. And then again, an overwhelming response as well around expanding the measurement. So robust, thank you for your poll results. Again, please continue contributing your voice through the daily polls. And thank you to the panelists so far for opining on them. Let's go to day number 2, which focused on who should inclusive financial systems include. And overwhelmingly here, people indicated that more can be done in our field to serve people who've been traditionally excluded from the financial system. And when asked who the most important group of people to include in our financial system are, one more item. People overwhelmingly identified women as a core constituent, followed by rural inhabitants and informal workers. So would love to open the dialogue with our panelists. Maybe if you can stop screen sharing here so we can see faces. Perfect. So I'd like to open the dialogue to our speakers here around that theme of who should inclusive financial system include. And women, as I mentioned, were very commonly identified by our respondents along with rural inhabitants and informal workers. How does this align with what you see from your seat in the organizations and the people that you're working with? And this is open to anyone.
You know, oh, sorry.
Go ahead.
How do we do this? I would just say that, of course, those 3 areas are very significant. And, you know, we always look to address the biggest gaps. And of course, they're intersectional, right? I mean, women are both urban and rural. You know, you'll have the same with other informal workers. There's a lot of intersectionality there as to who people are. But my own experience, even in the US, was that, and I'm sure it's the case in every society, there are very significant pockets that are left out. They're left out because they're not the largest. They're left out because of other biases. You know, when we're kind, we call them unconscious bias. But there could be ethnic groups. There could be certain communities, religious groups, or others. Even in a country as big as the US, you know, next week, the regulator, the FDIC, will put out its report on its survey on the unbanked and underserved. And I've served on their committee for many years. And if you look at the difference of those who they categorize as unbanked or underserved, it's, if you look at anyone who's Black, Hispanic, non-American, naturalized immigrant, for which there are millions, or anybody with a disability, you're probably at least 3 times underserved the numbers of most of the conforming population, which includes most men, women, urban and rural. There are very deep pockets in our societies. We just have to go back to remembering, you know, some of our metrics were to get the numbers, were to get the scale, and we do that. But we can leave behind sometimes very significant numbers, and maybe not even that as large a number. But I just always challenge ourselves to say, as I do when you use an algorithm and you get the answer you wanted, well, you got the answer you wanted. What did you want? Who did, in another context, that could be seen as, you know, redlining. That could be seen as a model that got you an outcome of your goal. But was your goal really that encompassing? So I just think in all our countries, we need to stretch ourselves to populations we might have thought we'd get to later. And they're not always that few.
Bob, I'll just jump in and maybe bridge from that conversation. I think what's interesting and new, I think women in rural feel like, Klaus, to your point about what were we talking about 10 years ago, where are we today? These are long-term, incredibly important targets. I think it's interesting that both domestically in the US, as well as in a growing set of countries, we used to talk about the informal economy as a developing country conversation, but it is just as much part of the conversation now when you talk about the US and Europe and other places. This idea of the ways that, again, I think it speaks to both the rising level of precarity of workers in the global north, and also I think it also starts to push us into what systems are we talking about, because I don't think this is just about access to specific products and services in the financial system. I think this is also potentially a nod to the level of volatility and precarity in people's lives, and who do inclusive financial systems need to include. By naming those workers, are we also starting to name that we're talking about a more extensive set of systems? Like, how are labor market participation facilitated or not? How are, like this intersectionality of payments and savings and retirement systems and all these things that informal workers don't have access to. And I think to that point, it layers on to all the ways that Bob also talked about that. But I would just throw that out to the group, because I think that's what we're seeing from the US, is this is really where one of these key convergent conversations is happening.
Mac, I would like to shed a light on another area. It depends on the countries. For example, in Philippines, we cannot say that we want to enable more or to expand financial inclusion to women, because it's the other way around. So some countries, maybe it's not a gender problem. Others could be forcibly displaced people if the percentage of the population includes high immigrants or high refugees. For example, in Jordan, definitely we have, due to social norms and other challenges, we have a gender gap, a huge gender gap, and we have challenges towards refugees. But for me, for example, I find the huge challenge is with youth. We are a young population, and people below 18, they are not, by law, they cannot have control over their financial accounts or savings. So this is a huge challenge, because many of them, they enter the informal labor market, they want to accumulate savings for the future, they want maybe to establish their micro entrepreneurship business or whatsoever. And for youth, since they are a huge segment of the population, it includes both gender, it covers rural areas and urban areas, it covers nationals and non-nationals and refugees. So I believe it depends on the countries, but maybe there is a lack of attention to youth in financial inclusion agendas worldwide, and they are the future. So we want to really enable them. That's how I see it. It depends on countries, but youth should be addressed higher attention.
Yeah, maybe now, after you guys have honed into the specific country case of the US and Jordan and the Philippines, maybe I can provide the bigger picture, taking a step back and looking at what's in our portfolio, like in for GIZ, what's important there. And so I actually was struck by this survey because it fairly represents our portfolio. So agricultural finance, rural people, MSME finance make up a huge chunk in our portfolio, and almost all financial inclusion projects focus on women. So that really reflects our portfolio and our reality. But so the poll highlights women specifically, and I also have to admit that struck a chord in me, because let's look at the Findex surveys, 3 Findexes, gender gap is overall, Maha, sure, like the Philippines not, but overall it's the same. And what that tells us is that we need to push more than before, period. That's what it tells us. And so GIZ does that. And, we're updating our gender toolkit that we've, had available to reflect new realities, technology, but also what you mentioned, that now developing projects are not standalone financial inclusion anymore, but embedded in bigger private sector development projects or agricultural finance projects. So we want to, change with that trend. And you said it already, Ma, like I also wanted to add this one excluded group, which is refugees and forcibly displaced people. Maha and the GIZ, we had the honor of working together with the Central Bank of Jordan. So it's wonderful to see you again. But I also unfortunately have to say that this topic remains of importance. We're currently preparing projects in Mali and Iraq. So sadly, it's not going to go away.
Maybe I can add to that. I think all the groups have been mentioned that are excluded, but what strikes me when I heard this question, who should be included, I think who shouldn't be. And I think the exclusion of these groups mimics the exclusion of these groups in other systems. And what it reflects is an invisibility that is damaging in terms of livelihoods. And so I think that's, and maybe it's a perspective of a technology company working at MasterCard. And I mean, listen, while we don't ignore these groups, and actually quite honestly, the team that I sit on focuses on them, I think we take a step back and say, how can we use technology to include the majority of people? And if you can include the most vulnerable, it's a good kind of meter for inclusion, but we need to, I think, look at tools like identification, access to technology. We even know access to cell phones, even though it's growing, it's still very uneven in terms of genders. So what are these kind of systemic reasons why these groups are vulnerable and invisible, full stop? I think is what we have to tackle with financial inclusion. And if you just quickly look up the stats, for example, of IDs, and who doesn't have access to an ID, you'll clearly see that the groups that we mentioned are amongst the highest numbers. And so it behooves us to look at technology as a way to be inclusive. In our team and in MasterCard, we've developed some approaches to a digital ID that try to knock down some of those barriers, being very specific. But I think we start from the point of how can we include everyone? And most vulnerable groups are canary in the mine, as they say. But I think unless we shouldn't focus pocket by pocket. I think we focus at the highest level of what are some of those things that are keeping people out of the system in the first place, and how can technology help solve those?
I agree. I think that, just if I can, couldn't agree more. The lack of access to financial services is probably a proxy for a lack of ID, lack of access to certain technology. Some countries, it's a proxy for race or ethnicity. But I mean, I really think we have to, that's why I first put it in a bigger picture too. And question, is it only the product or the service that's lacking? Or is it the true access that that community has to the other facilitators of livelihoods and wealth generation? Without those other tools, you can't open a bank account. We all know the stories, right? Without the ID.
Yeah, I think that and maybe we'll use this, Mac, to go into the next question. But I think it goes back, Bob, in some ways to you're rightly bringing us to, if you're giving somebody access to an inequitable system, right? Where does that bring you? And certainly the working group, the Building Inclusive Financial Systems working group that we've been convening, Mac's been leading for us, the conversations have been super robust around not just figuring out how to include in the system, but how do you actually start to build, if you say financial inclusion needs to include everybody, but you don't name the specific target population and build for them from the beginning, if it's not native to that population, will we get there? And I think that's a fundamental question. And then I think that implicates other systems, right? So Mac, do you want me to share the screen and we'll just walk through I know we're running time, but we'll just share this with everybody.
Yeah, no, we're running right on time. Let's go to day 3 polls, which were around what do inclusive financial systems need to be successful. And if you go to the next slide, I'd love, continuing on the theme that Salah brought up, which is one of the role of technology and data as a facilitating mechanism. People didn't just indicate it was important, people indicated it was the most important thing over the next decade. Conversely, though, if you look at the response to the next question here, people are very concerned around the potential risks. So it's a dual-edged sword where this presents a lot of opportunity, but people are also concerned around the risks that this potentially may pose to inclusion and to households. Other polls from the day, if we just want to go through them real quick, Ida. People very strongly agreed that the government has an active role here in developing inclusive financial systems. And the last question here, which has been touched on by the group already, was around how important is the intersection with other systems to households and their finances. And people strongly agreed that inclusive financial systems directly support these other areas as well. So people are already thinking a bit broader around the implicated systems here in an inclusive financial system. So why don't we take off the screen share, and would love to get your responses within this group, continuing on that thread of data and technology, and then also the role of government within there. What are some of your initial reactions of those polls, and then building on where we were, how do you see this evolving in the years to come?
So,
go ahead, Klaus, and we've missed you on video. There you are.
Sorry, yeah, I was just confused with the screen. So anyway, like, I mean, data and technology, I'm not sure if you read the article last week. Quartz Africa reported that there was fraud case where thousands of mobile money accounts in Uganda were hacked. And so the damages in the millions and services needed to be shut down, and you can imagine what happened to consumer trust in mobile money, right? So technology has opportunities, but also has risks and there are two sides of the same coin. And so cybersecurity and consumer protection, I think, have to be huge and high on our agenda. And data privacy has been an important topic for German culturally. And so the GIZ supported the BMZ also in the GPFI to work on this topic as early as 2017 and 18. And we've also worked on cybersecurity. So technology and the risk that stems from technology, I think, is very high on our agenda. In our portfolio, we also look at the technology. We call it digital by default. So we actually have to explain when we don't use digital. And so in Ghana, we work together with BIMA on mobile health insurance to include more people cheaper. And in ASEAN, we offer index insurance that uses satellite data. And in Jordan, we've worked together with the Central Bank of Jordan to include digital financial services, to include technology. So I think the use of data and use of technology is just increasing in importance, but we also have to look at the risks, and they are significant.
I would like to discuss this point. Although I'm concerned, but I'm very optimistic. Definitely, it's a dual-edged sword, but maybe one of the edges is more promising than the other one, because the other one can be mitigated or managed. So cybersecurity, definitely data privacy and protection may be the main concerns, and the financial literacy and digital financial literacy. Maybe the focus should be on digital financial services, literacy and awareness. However, maybe a concern, I want to be very challenging in my ideas, not conventional. Why always the concern when we talk about data protection, privacy, consumer protection, we talk about payment systems that are not getting the exact attention and focus as other digital financial services provided through banks. Definitely consumers are more vulnerable, less literate and educated. But maybe we should try, on the other hand, as Klaus mentioned from the assistance of GIZ, try to focus on how we can complement our systems with more security measures, more controls, more of awareness campaigns. For example, payment systems in any of the countries are classified according to the number of transactions, value of transactions, how centralized they are or not, so if they are systemically important or not. Maybe we can start to designate part of these financial systems that serve the most vulnerable as systemically important and focus more on equipping these services by more of robust data policy and protection, more of cyber resilience, crisis management. So if I want to operate a system that serves the most vulnerable, I have to comply with higher standards. So instead of only working on the demand side, we are skeptical, we are scared, look what happened in this country or that, maybe we should start, whether regulators or international entities or standard setting bodies, if you want to provide services for this segment, you have to protect them with higher measures. This is very something to debate.
I think I like your expression too. I mean, I too am optimistic in a way because these are very, powerful tools, both the technology and the data. And they're not always equally distributed in terms of access to them. And I mean, especially the analytics side of it and the high technology challenges at times. Regulators, you brought it up at the beginning, and others do. They compete for the resources from the market. So getting people to do some of the analytics that might be useful is challenging at times in the nonprofit and the public sector. But I also see the use of data as a way to help us drive our attention and our resources. Where will we find the equivalent of food deserts? Where don't we see transactions occurring? Is it because of lack of technology, lack of market access, lack of telecommunications coverage? Where do we see hotspots? Places where things are erupting. Just as you would on the stock market, you'd look at unusual patterns. How can that be helpful? Not just in a predictive mode, but in a proactive one. And where does that indicate to us these might be segments or geographies where other resources are required? And we should be looking because we're not getting the engagement we thought. Sort of like part of the city not using the power grid. At some point you'd question, can they not afford it? Are they getting it another way? Are they sitting in the dark? So as we build these national grids of financial services, we've got to learn to use that data, proactively, not just defensively.
I want to add something.
Go ahead, Maha.
Thank you. For the other part of the question regarding the government, definitely governments are the largest single payer and payee in any economy. So when they push on financial inclusion, definitely they are the most powerful economic agent. And when they push on digital financial services, they reap the highest benefits out of this. So when they achieve cost efficiency, cost cutting, reducing corruption and leakage of money, so the savings from their side is tremendous. So why they don't invest more in reducing the transactional costs on people, saving the ecosystem, putting more policies to protect privacy and to regulate the entities who would do that. So the question when Mac addressed 2 or 3 of the questions from the audience, from the polls, we can even link 2 sides of the story in one comprehensive solution.
I was just going to add that, like what others have said, Maha and Bob, I think I'm more optimistic. There's always pitfalls to any kind of new wave of technology or something that proves to be powerful. But I think that the reason that I'm more optimistic, I think, is around service provision. And what I mean by that is, can we get to a point where, or maybe even empowerment is a better word, to use a word that's been used before. And so we get to the point where the data that is created by the populations that we mentioned, so bottom of the pyramid, refugees, displaced people, people that have been discriminated against because of many factors that we talked about, the data that they're creating, there is an ownership of that data, and there is a way to use that data to get access to other services. There's a lot of data, even if it hasn't been digitized yet, that consumers are throwing off but don't have any access to. And so we think about, we hear about big data. That was the catchword, the catchphrase for a long time. On our team for quite some time, we've been just referring to little data. And that's the data in little pockets that is generated in communities, but the communities don't have access or ownership to that. And I think when we think about, when I talked about NID before, it's how do you show up in the system? How do you come against the invisibility I talked about? And I think a lot of that is data ownership. So I am hopeful and optimistic in the opportunities we have to digitize, how we give that data back so farmers stop, for example, being service seekers. If you look at a smallholder farmer, for example, it's one of the populations we focus on, they spend an inordinate amount of time seeking services. The services are hard to reach. The service providers can't reach them because of the cost of acquisition I talked about before, but also because of lack of data. And then on the other side of it, how can service providers actually serve better because of some of the things that Bob talked about in terms of bringing the power of data, if you stick on farming, satellite data to farmers so they understand how to earn more. So I think both ways, if we think about data and think about the user at the center of that, controlling and governing their data to get better access to services and being served better by providers, I think the future is bright for data. And I think we cannot ignore, but there's ways to ensure security and privacy. You see regulations like GDPR and the like. And so I think the government's role is to keep ensuring that and to keep making sure that the data policies are right-sized for their country and the goals that they want to accomplish, not forgetting the goal of financial inclusion.
Absolutely. Any final concluding thoughts on this topic before we move to our final question with the group? Great. So the polls are still open and we don't have results from today's polls quite yet. So for those out there, please continue to raise your voice and contribute to those. What I'd like to do is actually ask each of our panelists one of the questions that is on that poll in a lightning round here, which is, it's 2030. We are reconvening 10 years from now. What is the one thing you believe would make the biggest impact on inclusive financial systems over the next decade? And it could be an area of focus, a policy, or an action. But over the next decade, where do you think we need to focus?
And lightning round, because it is, we've got about a minute. So each of you should go for it. And I'll reserve.
Okay, I'm going for it. I say it's enabling regulation with 3 elements. A level playing field of banks and non-banks to provide e-money and payments. That's one element. The second is allowing for financial service ecosystems through interconnectivity, but also interoperability. And the third level is the balance of use of data with privacy concerns, but overall enabling regulation.
It's Bob. I think Klaus covered most of what I was going to say. Thank you. But all I'll add is just for governments to continue to remove barriers that allow access, because they're the same barriers that hold people back from voting. Things like ID. Let's be more creative in the way we address, barriers to access. And also, let's just accept that access to finance, we don't want to run it like we're running generators. You want a national grid. just as we want power, we want telecommunications to be interoperable and to be really national. We need a financial services sector to have that interoperability and that extension nationally.
I'll add two. I think one is a laser and just brutal focus on building solutions that meet real needs. So understanding the customer. All the populations that we want to include, all those that are low in financial inclusion, already live robust financial lives. They have systems, embedded systems that they've relied on. They have trusted networks. The extent to which we understand how people are living their financial lives now and what they need is the extent to which we will serve them adequately. The second one I would mention is partnerships, which sounds kind of corny and overused, but if there was a partnership where all the partners brought their best assets to bear across government, who has a political mandate to serve all their citizens, tech companies who have solutions to do so, and NGOs who understand and have a touch point to these communities, if we could get the administrative hurdles, the lack of understanding, sometimes real barriers out of the way and have real public-private partnerships that really draws on the assets of each, I think we would move the needle.
Perfect. And final word to Maha.
Actually, I think it's about data-driven policies and strategies. Once we have a precise and accurate data with good analytical tools, we can customize or revise regulations and policies. And we can customize everything according to the customer centricity. So all in all, these are the ingredients. Other than that, interoperability among all systems, not only among digital financial systems, but as well along other health systems, agri systems, everything. In this case, we can see sustainable development goals on the right track.
That's excellent. Well, thank you to all of our panelists. Ida, do you have a final word you'd like to share too?
No, we're cutting into the next webinar, so I know we
Yes.
need to, but I just want to thank everybody so very much. Great conversation.
Yeah. Thank you for the great conversations today, and thank you to CFI for sponsoring this year's Financial Inclusion Week. Thank you for joining all of us, and please continue to raise your voice through the daily polls. And we'll see you and continue the conversation online.
Thank you.